Hi everybody, welcome back. Andre here from fxSS.net. When it happens, we're there. Right. This is the first in a series of many videos, not many, but a few videos concerning the TDI. We need to kickstart this whole process with the TDI because for me, it, it's basically the core foundation of understanding what Steve Marrow's onto. And there's a few other guys that align themselves with the TDI when they make their trade decisions, and it's very interesting what the TDI does. So, a quick brief history about the TDI. The TDI was developed by Dean Malone from Compass FX in 2005. It was brought to the market. Very interesting also is the fact that when Steve Morrow came along and introduced his BTMM method, he, of all the thousands of indicators out there, he actually chose Dean Malone's TDI and implemented it into his processes. He even invited Dean Malone over to his boot camps to explain the TDI, kind of a session exclusive with Dean Malone. Dean Malone went on to develop a few other indicators, very nice one, DOTS, CAPI, APB, and I'll show you a few of them. We'll have a small session on one of them. I enjoy very much. And we'll see that when Dean goes into his trading room, at the time when he was trading, he no longer trades, he's doing ministry somewhere in America, Midlands. Uh, I'm not quite sure on that, so don't quote me on that. When he goes into his trading room and does trades, live trades, he uses the TDI with another indicator he developed, and the combination of these is phenomenal. We'll get into that at a later stage. So let's jump over to the charts and have a look at the TDI. Right, on charts here, you'll see the black candles are the bear candles, the white are the bull, right? Doesn't tell me much except it's bull and bear candles. Right, I don't use these, so I'm going to take them out. Right, you live for this line here, and one may wonder what this line is. This line is not your line graph. So let's look for the line graph. Put that in. Let's make it red. There's your line graph. And the two are exactly the same. Well, not exactly, but more or less the same. Would it surprise you if I tell you that this particular line here you see is your green line of your TDI? That I'm sure you didn't know. Right. This is a 2 moving average, guys. I'll take it out. I'll put it back in. Sorry. Take it out. Come on. I'll put in the moving average. Put that on the chart. Okay. Moving average 2. Simple close. I'll make it black. And there's it back again. Look at this. There's a peak there. There's a peak there. There's a peak here. There's a peak there. There. Right? I'm going to leave it up there. And when people talk about the TDI, and one of my mentors, a favorite mentor of mine, he really cracked this thing out because he says the repaints, the RSI. The TDI are moving averages built of the RSI. They don't repaint. I have a collection of TDIs, actual collection of 28, I think, TDIs. And depending on what I need, I put these TDIs up on the chart. I'll give a few of them to you, as I will with many of my other indicators, to simplify your trading and to give you more estate on your chart. So when you do your chart analysis, and yes, that's right, you are going to do chart analysis. You're not going to just go and copy trade and signals and press buttons, buy and sell. You're actually going to spend 5 minutes or so just analyzing the viability of a good trade being presented to you. Okay, please do yourself that favor. If you're not prepared to, then this place is not for you. You have to take time out. This is your money. You're not gambling. Treat Forex like most people say, treat it like a business. Okay, going back to the TDI. It's a 2 moving average built on the RSI 21 as Steve has it. So the green is your price action, right? And as I mentioned before in prior videos or blogs, we price action traders. So here we can see we're following price action with a moving average set to 2. The red is your trade signal line, which follows your price action line, and it's set to 7, right? And this here, sorry, yeah, it's set to 7. And this here is your midline, actually of your Bollinger Band, or as Dean Malone calls it, your volatility band. And that's set to 34 with a deviation of 1.618. And that 1.618 may sound very familiar to a few experienced traders, and that is because it's Fibonacci aligned. And Dean loves Fibonacci. And Steve recently also implemented Fibonacci into his trades because he's seen Michael Huddleston from ICT use it quite effectively in his trades. So there's this sharing of information, and it's quite cool. But before all of that really happened, Dean Malone had the TDI in place with a deviation of 1.618. Right? The values of it, let's see if I can bring those values up. There. On this particular TDI I'm using, it doesn't ask for deviation, but I know in the code it's there. Right, so yeah. Right. Here's it here on one particular chart I'm using. This TDI on this chart here, which you don't actually see. Okay. In fact, on this chart are 4 TDIs. You only see this one here. So the TDI, price action, trade signal line, market baseline, the yellow or the gold, and the blue is your volatility bands or your Bollinger Bands. Okay. What a lot of people also don't know is that the red represents the green on a 1 hour, and the yellow represents the green on a 4 hour. And this is exactly what Steve Morrow does with his EMAs. The 50 represents the, what does he use? The 13. So 50 represents the 13 on a 1 hour, and 200 represents the 13 on a 4 hour. Same concept, right? We use it a bit more intelligently, as I'll reveal to you in the next video how I do it. But that's exactly what the TDI is. It's not a RSI. We can take a RSI and we can put it on here, and we can make it 21. And there's your RSI. And you can see that aqua line is not the same as that green line. That's a 21 RSI. Right. So I'm going to delete the moving average. Sorry, the RSI. And we're going to carry on. So with my candles, if I don't use these candles, I don't use that. I use what they call sonic candles. Okay, goes out. I use sonic candles, and sonic candles are quite cool because if you look at the blue candles, the darker the candle, the more momentum and volume there are in those particular candles at that time. The same is applicable here with the bull candle, the bear candles. The darker the candle, the more the volume there is, and you can see here this volume here is reflected in the shark fin, and isn't that where you find volume? There's a shark fin there. There's a dark candle there. Okay, so I use this to understand my charts much more easily, and this will also be given to you sonic candles. And what's nice is when I just want to look at the chart without my candles, I just remove it and there's my line graph. Well, that's not my line graph, it's my 2 moving average. So you can see the 2 moving average pardon, really hugs the candles all the time, and that's what price action guys do. They follow the candle all the time. Pardon. And this 2 moving average is actually your green here at the bottom. So I'm going to take this 2 moving average out, knowing that we now know what it is. and we're going to look at our chart here. So quickly, the indicators we use, and there's two schools of thought here. When it comes to me and trading BTMM and the type of trades that take place. This is the way Steve Morrow does it, right? He does what you call, there's a particular trade. Let's look at this one here. That day, just exactly here. And it will be that day. One of these, Steve would enter right here. And that, he calls that blood in the water. And from that area or this area onwards is what a guy up in the UK, Jeff from FX Mindshift, he'll only enter the trade from that point onwards. If you go through any of his videos on YouTube or look at his documents, you'll see that he always seeks TDi confirmation after recognition of a pattern. Steve just sees a pattern, there's a double top here, and he enters it. And I really don't know how he takes the TDi into consideration in trading, maybe for exiting, but he will tell you there's a retracement, pullback, and eventually reversal, peak formation high, peak formation low. But there, like I said, the two schools of thought is Dean will enter, sorry guys, not Dean, get that out of my mind now. Steve would enter this trade at blood in the water. And yeah, when it passes through the MBL, you'd call, or you'd say add more to the trade, right? Because it's going the way we expected it. Let's just add a particular, this is a pattern recognition indicator. Here's a double top, and it will go down, right? That's a rising wedge. Here's a double bottom. Very good double bottom. If you look at this double bottom, Steve Morrow would enter straight away. He'll enter somewhere there. Let's put the 5 and 3 up, 5 and 13. And when it passes there, he'll enter. Fortunately, FX Mindshift will also end in the same place because it's above the MBL. That's the TDi confirmation. They want you to be, for it to go long, it must be above the MBL. For it to go short, it must be below the MBL. Right? We use the same principles as FX Mindshift, but we just add a bit more into it. We also use the 50 midline for our trades as well. Blood in the water, which is also advocated by Dean Malone, is a bit tricky in a sense, like here's blood in the water, but below the 50, it may reverse on a market baseline, which is a support area, right? You can see here, it's support, okay? So, blood in the water is applicable to Steve Morrow. FX Mindshift will enter from there, and so would we from there. Now, you may say you're limiting yourself to trades because we forfeit in this whole area of trade here. In fact, this massive candle here. There are so many opportunities out in the market there for you to forfeit a trade for the purpose of safety, right? It's better to do so. In fact, they say no trade is a good trade. And this is the methodology we employ as well. If we don't see it as being a good trade, we're not going to enter that trade. We have risk management principles which we adhere to. And we also have entry rules and exit rules that we adhere to. So I'm just going to take this off and I'm going to put in something here which is going to really, you guys are going to like. Give me a sec. And yeah, you see that that's a signal you're going to get. Now, I'm not even at the end of the chart here, but this thing says to me, GPU is there on a 15-minute, blood in the water, sell, entry, caution, right? So let's go to another chart, and this is there, blood in the water, right? Sell. The green is below the red, It's ignoring the MBL, and that's a blood in the water trade. That's why we put the caution up there. Caution. Right? These are the signals that you're going to get, and these signals come all the time. One is blood in the water. Let me just enlarge this for you so you can see hopefully a bit better. One is blood in the water, 2 is MBL trades, and 3 are shark fins. Right? So 3 shark fin. There's your shark fin there. Right? Look at this particular entry here. Sorry. There's a shark fin there. Starts there. Shark fin. And let's say right at the top. 35 pips. 35 pips is $350. Look at this massive trade you have here. Beautiful trade. 2 is the MBL. It's below the MBL. And then it becomes a shark fin. Right? This is a good trade for me. I trade like this. So there's a slight pullback. And we go right down. 92 pips, guys. 92 pips. $920. Big money. In the space of 17 times 15. That's minutes. 17 times 15 minutes. It's 255 minutes divided by 60 minutes is 4 hours, 15 minutes, this particular trade here. So, 4 hours, 15 minutes, you're going to sit in this thing and you're going to wait to exit. Nope, you're not going to. We're going to give you an exit signal. And here's your exit signal right here. There's it there. Okay. So you're going to get 3 types of exit signals. You're going to get the short-term exit signal. That's when the green crosses over the red, or the green crosses over the volatility band, right? And you know you should exit the trade. See there, there's an exit there, there's an exit there. So this trade of 30-something pips from there to there, I like to go midpoint, it's 26 pips. 26 pips, $260. You moaning and complaining, and shortly later you get another entry, right? 92 pips, and you exit there. This entry here is a change of character entry. That's when the market changes character, and you'll see here, this is when the green crosses over the MBL. That's also an exit. So this whole area here is sales, or going short, selling, from there to there, which is that area there. There's a TDi we have, which has a second trade signal line. I'm trying to develop something of it. I haven't really done much, and I don't want to deviate from BTMM processes to throw curveballs at you guys. So I'm just going to stick to BTMM and say, this is where you trade. This is blood in water. But blood in water for me, you can see is blood in water, but I'm not giving you a 1 year. Why? Because it's below the 50. If it were blood in water above 50, you'll be notified of it. Here's blood in water, 1, below 50, and that's good, right? Blood in water below 50. Remember this blood in water, sell entry caution, right? And we give you this over 37 instruments in 4 time frames. I'm just going to go and get a bit radical here. Take, let's go use this cipher. And there you are. There's an MBL trade, there's an exit. Right? You'll be notified of a trade, and you'll be notified of an exit. 15 pips, why not? And then again later, after a retracement, there's another trade. Right? This is the exit. 22 pips. Right? You get it on a 1 hour if you're a 1 hour guy. I forgot to take this out. Here's a bottom. Take this out quickly. Patterns. Right. Here's 1 hour candles, and here's 1 hour here. We will be showing you how to trade these with top-down analysis. That day to there, that's 35 pips. If you know how to do it, it's 53 pips. Don't complain that you missed 53 pips and you only got 30 something pips, because we would later you have that right there, 31 pips. You have these trades here, they're all over, and I can validate each and every trade. Shark fin, there's a shark fin there, right? And if it goes to the Bollinger, the volatility band must come down again. So this is what our indicators do on a TDI. In the BTMM method, safety trade, price action, looking for a trend, and giving you entry as well as an exit. Now we have two types of entries, right? We have where it's always, we notify you that it's always in a trade. So I'm just going to leave this area here. I'm going to highlight it. So those boxes are. I highlight this. And I'm going to remove our indicator, our entry indicator. Right? I'm going to put in this indicator, which is also an entry indicator. And here's it here. And you notice now there's an entry there, there's an entry there. But it only happens once. This here is what we call a crossover indicator. So we're making a decision, should we send you this to tell you there's an MBL taking place and leave it from that point while it's in a MBL type of trade and when to exit? Or should we notify you, as you seen previously, that every time there's a potential MBL trade? And notice we only give you signals. If you're going short, you're only going to get signal on a bear candle. If you're going long, you're only going to get a signal on the bull candle. We don't believe in discounting trades and all of that. We trend traders, right? You may go for it. You may get to a stage where you can actually do analysis on your own and say, you know, I'm going to take this discount because I know this thing's going to bounce back, right? Let's see if it does. No, it's not a 50, is it? Right? Bounce to the 50. I can't quite say, right? It hasn't really bounced on that 50. There's it bouncing here, along here. So if you're into retracement trading, reversal, trend reversal, and so on, use advanced techniques in TDI. They call it SP. I don't see it here. There's one here. Right? Then you can engage in such trades. We're giving you the classics. We're giving it to you across 37 instruments in 4 time frames. Don't fret and bother that you missed a trade. You'll always be getting trades all the time. This is a 1 hour. I'm going back to a 15-minute, and you can see for yourself. Wow, look at this. Beautiful. Take this out. Yeah. Okay. Tell you what that is in another video. But look at this. 2, which is good for us, MVLs. Right? And it comes back down, and there's the exit D. Here's the exit. So from here to there, 41 pips, over 15 minutes. We don't give signals for 5 minutes. It's just too many. It's just too many, and you know, in out. You can see that it's chaos. You know, in out. It's really not good. 15-minute entry. Same like Steve Morrow, looking at a 1 hour, getting a signal basically from a 1 hour and entering on a 15. If you want to, I see that Steve Morrow in some of his later videos, he gets into 5-minute entries now. So that's not sniper entries. Same like Michael Adelson. So that's it, guys. That's the TDI and our signals, entry and exit. Right? 3 types of entries. Your blood in the water, only from 50 up or 50 down. Your MBL crossover, and then your shark fin, your exits. And you may say to yourself, well, I don't need this because I have push notifications. We know that. But your push notification, if you're going to use push notifications and you want opportunity in all 37 instruments across all 4 time frames, you need 37 times 4, you need 148 screens in front of you, and you need to be sitting in front of those screens 24/7, or what is it, 24/5 if you're going 24/7. 148 screens, and you can get your signals, all your push notifications. With our packages, as I explained in my introduction video, you can define what you want to. You can go the American Drifter, the Euro Drifter, African Warrior, the Volatility 8, the CFDs and gold and Bitcoin. Jump over to the NASDAQ. Yeah, this thing was moving nice on Friday, right? And yeah, that's NASDAQ. Nice. And you can get indication of when to enter trade there. Okay. I'll take this other indicator out. So once, just leave my other one there. Right. There's an MBL trade. And there's a short-term exit because it crossed over the red. But you're gonna, in the next video, you're actually gonna ignore this. And now you're gonna maybe exit there. These buggers move pretty fast, eh? That is $211, $150, depending where you exit or the right. $200. Nice. I like it. Thank you very much. That's TDi. And please, it's not a RSI. It's moving averages. It's very, very rapid. I proved it to you. So join us in our second video where we get to show you all the tricks we use to enhance our trading decisions using TDi. Thanks, guys.